The gentleman from Illinois, Ms. Biggert.
Thank you, Mr. Chairman. I would like to commend Chairman Moore for the hearing that we had yesterday in Chicago on commercial real estate. And we spent a lot of time, I think, on talking about a lot of things that are here today. And I was really sorry the Treasury could not find one staff member to be there for that hearing. We had most all of the other regulators, the SEC, the Federal Reserve, the OCC, the FDIC, and a couple others. And what we heard was that, and as you know, this was to be the regional regulators, so we really got to those that were on the ground to compare with what we're hearing in Washington. And one of the things that troubled me was that, well, obviously in Chicago and the surrounding area has a very high deficiency and default rate for these banks. And one of the things that came up was that the Federal Reserve talked about how they had been really looking at for almost 16 years about looking at the fact that there was a severe concentration in commercial real estate by many of the banks there and all over the country. And just recently, last week, we had one Midwest bank failed in Chicago, and the week before there were seven banks that failed, including the Broadway Bank, which was owned by our state treasurer. And all of these involved over-concentration of real estate. Now, you're talking about putting money into these banks to be able to loan to small businesses. And in the hearing, we found that there wasn't an overabundance or a plea for loans because for the small businesses was because they're really looking for certainty in the market. If there's no certainty, they don't know whether they can have the ability, if they do get a loan, to do what they want to do. And they talked about how what they need are expanding ideas for more than 1 year. It doesn't help if you increase Section 179, expanding amounts that only last until the end of 2010. And having the 5-year net operating loss carrybacks, and that's going to expire. The accelerated depreciation, I think that's expiring. So these would immediately inject small businesses with the money to expand and create the jobs, not looking at just what the loan that they can get. If there's no certainty and what's going to expire and what's going to be available to them, and the high concentration of these real estate loans that are going to come due. Does this mean? And I'm looking at page 11 of one of the bills, that it says that the secretary may not deny an application for a capital investment on the program solely on the basis of composite rating of the eligible institutions and the uniform financial institutions rating system. So I don't know where if you have a 1 or you have a 5, if they're going to be able to get these loans, and is this a basis for disqualification? So I think we really need to look more rather than just saying, well, here's another $30 billion that we're going to give to these banks, and yet the small businesses don't have the certainty. So if anybody would like to speak to that, I would be delighted.
Yes, ma'am. I could add one thing, because I think we have to remember this is not these loans are not pennies from heaven. Basically, you have to have a business person who has a business plan that he thinks is going to make money. Then you're going to have the flinty-eyed banker looking at that business plan to see, is that going to yield any money? And that flinty-eyed banker needs to know that there's a flinty-eyed regulator in back of him to look and see, is this loan going to pay off or not? Because ultimately, we're talking about capital infused into a bank, and it's not, otherwise a subsidized loan.
Well, do you think that if it's infused, and yet this might keep that bank, just barely qualifying, Well, if they didn't have that money, they would go under, as so many banks are.
There's a huge incentive in this program because the incentives are so weak. There's a huge incentive for the banks to hold this capital in, to bolster, especially for poorly rated, camel-rated banks, to hold this in as capital and not lend it out.
Gentlewoman's time has expired. The gentleman from California,